Doing a brief update for the week. This is basically my end of the week recap. As you can see, my portfolio just shy of 92 or 72. We're actually over 72. We're up over 18K. We had a little bit of a pullback at the end of the day. We'll have to wait and see how the market is going to move. We still have a little bit of a cash balance of about $1,000 that we'll probably be deploying more than likely into our risk portion. I did pull some stocks out of certain areas. I took a little bit of profits on Redfin. Redfin had gapped up 20%. Decided to take it. Similarly with I bought a little bit of Chewy, took that out as Chewy had a little bit of a big pump to the upside. So I only had a couple $100 between them. Ended up taking 20% on that money, and I figured out because I'm still believing that the market is going to have a pullback. And let's just pull up the old trusty chart here for. All right, we'll look at the chart here for the 10-year, and like I said, the 10-year yield is still going to rise. We're seeing still rising interest rates, and like I said, the interest rates will continue to rise to the upside. So we're still long the SQQs in my Webull account. I ended up getting rid of it out of my portfolio as it is a short-term play. I think probably not the best idea, but I decided to lower my hedge, and actually I put that money into JEPI and into Nusi. I put a little bit more, put 100 each into these. I bought a little bit more of CRM on the downside, a little bit more of BABA, and then I put the remainder of that into food stock. So like I said in my last video, food prices of course are going to be going up. And so we'll go over here, we'll take a quick look. Food prices set to rise for 2021. And it says here, the U.S. Department of Agriculture forecasts an increase of 2 to 3% of food prices this year compared to with a 20-year historical average increase of 2.4. Food costs are expected to increase further in 2021. And there are numerous articles that you can read here that are talking all about how supply chain disruptions, inflation, and of course leads to food price rises. And we've seen that in stocks, for example, like Tyson. Tyson was one of the companies that I was buying. I did buy a little bit more. I will be buying more for the coming week, and that's typically what I will be paying attention to for the upcoming week. So basically I'm gonna do two of these in one. So this will be what I'll be looking for the next week, and of course the update. As you can see, just looking on the day, so for Friday we were up 600, a little less than 1%. For the week we're coming in at 27.35 with a 99 in dividends. This is primarily a dividend account, and as you can see, I started this account back just about here, had about 200 bucks back in November of 19, and eventually we started to ramp this portfolio up. Eventually we started to ramp this portfolio up quite a bit, and we are here where we are. Primarily most of the stocks that are in my portfolio, especially obviously in my dividend portions, overwhelmingly dividend, as well as in finance. Basically just about everything pays a dividend. And of course we have the risk portion. We still have Wells Fargo doing well. Basically my stocks for growth are BABA and CRM. We're holding on to Norwegian and a little bit of NEO. I like NEO more in the 30s, so I'm waiting for a little bit more of a pullback. We had a nice big boost, so I sold the amount that I had bought previously when NEO was in the 30s, sold that when NEO gapped up into the 40s, took that profit, rolled it over into something else, and I've got a little bit of cash on hand. So moving forward, this is typically what I'll be adding more money to into things like Norwegian moving, of course, moving to the upside. As you can see, we had a little bit of a pullback, a little bit of a shakeout, similarly to, for example, JetBlue chart looks very similar. As you can see, this nice big shakeout. Another play from way back when was also play also right here had a similar shakeout where the stock was trading at 17. I saw the shakeout. I unfortunately did not have any money, and I was like, man, I wish I could have scooped up some of these when it came all the way down to the 13s, and then it closed all the way back up. Eventually the stock moved higher. But sometimes that happens. Sometimes you get a little bit of a shakeout. You got to be willing to, even here, look at this right here. From 42s came all the way down to 38s. Those 38s were free. We were making money. If you had bought here, sold it up here, just in the one day, you were already making 11.5% just in that one day. So the stocks that I'll be paying attention to, I think Tyson for a little bit of growth, not really for the dividend, as I do perceive Tyson has quite a bit of movement to the upside. So basically looking at Tyson, we do see from where Tyson is, I do perceive that we do have quite a bit of movement to the upside if Tyson is going to retest where it was pre-pandemic, right? The stock has not recovered. As you can see previously, before the pandemic, you can see where Tyson was. And then 2020 rolled around, you had January, February, March, and of course the stock fell out of bed. So we do have quite a bit of movement to the upside, looking at around another 20% in the stock. And of course, you can grab a couple of dividends. We'll have to wait and see. As Tyson did say that they will be increasing the cost, food prices will go up, just like oil, right? Talked about oil, ExxonMobil moving, of course, to the upside. We still have a long way to go where we could potentially go because of the rising price, cost of oil. We're just getting started. The country is not even open. People are not moving about like they used to. You don't see air travel like they used to. And look at ExxonMobil already. ExxonMobil, especially once things start to get going, you're going to see gas prices move up. Price of oil is going to go up. And as a result, everything that costs oil or gas, that requires gasoline is going to go up, which is going to be things like food production. And of course, you'll see other products moving to the upside as commodities. Of course, the money's got to go somewhere. The government printed all of this money, and a lot of that money is going into commodities. Originally, for example, it went into housing, why the housing market had a boom. You had an artificially depressed housing market because of the moratoriums. Not too many houses that were on the market. People were looking to buy houses. You had all this low, cheap debt, right, from the low interest rates. And of course, now interest rates are starting to rise. So people are going to start to be hurrying up, looking for areas where they can put this money, because obviously they're worried about inflation. So we will see food prices rise. We will see gas prices rise. We are seeing, of course, wood, right? The cost of building a home is going up because the wood futures, just from where I saw it last time. Again, wood is up another 8%. Similarly, with, for example, with other commodities like copper and other minerals, from where I saw it last time, which is why I should have bought it, up 46%. Same thing with steel. I was long steel. I got out way too early. Bought it down here on the pullback. Talk about missing really the big move. I bought it down here at like 16 and change, and I sold it around 18, and it just kept on going up. So if you get a notion of where something is going to be, you know where the money is going. Sometimes you got to buy and hold on for dear life throughout the shakeouts, right? Look at all this shaking out here, going on back and forth. If you know where the money is going, you got to be willing to hold for the ride. Look at this, just straight up in the air the past couple of trading days as commodity prices. Look at this volume. Look at this buying. People are just buying it up. Money's got to go somewhere. All this money that they printed. That's basically what we're looking at for the week. I will be keeping my eye out because my goal, of course, is probably more than likely we're going to see if we hit 80K for this week. We still got a couple more weeks. Hopefully we'll pass 18K. And of course, we got a lot more dividends that are going to be rolling in till the end of the month. This is a month, I think I've got about 22 different dividend payments coming forth. It's going to be around 3 and change. But we're going to leave it there. I'll catch you next time. Pay attention to those food stocks. You're looking to make some sweet gains. And of course, most of these dividend stocks, for example, like KO, FLO, Tyson, and of course, the other one that I spoke of last time, which was Crafts, Heinz. This one pulling back a little bit. I will buy the dip. I'm looking to see how the stock reacts at 36, but I am long. I'm long both in my Webull and I'm long in the M1. We'll be adding to it. There's a little bit of a dividend, so if it pulls back, I'm happy because that dividend yield will go up, and I'd rather buy, obviously, stocks on the cheap when I perceive that a stock has quite a bit of room to run, as people are going to be looking for places to put their money, and they'll be looking for depressed stocks. That's going to be it for now. Feel free to like, comment, and subscribe, and I'll check you out next time.